Good morning, everyone. Welcome to the London session on TopstepTV. And yes, we have hit 150,000 subscribers. That is absolutely mind-blowing. So thank you, everyone, for being here with us, subscribing, telling others, participating, and just generally being a part of the community that is Topstep. If you're new here, welcome. My name is Market Stalker Dee, aka Deeyana Angelo. I've been trading for 18 years and I'm a Series 3 licensed trader. Now, I specialize in some of the slightly more unusual alternative products, especially for London. So this session is starting an hour earlier because of the USA clock change. Now over here across the pond, I'm located in London, we don't really change our clocks until 30th of March. So we're going to have this slight disparity starting earlier. So I'm going to stick to the combines because for me, the London Open is not exactly the time when I'm kind of clicking buttons and going in. Why? Because I'm looking for understanding of what they want to do with it. I typically look for larger chunks of the trend on the day, so I don't really scalp unless we have some, heavily obvious range and stuff where the larger opportunities are not available to me on that day. And I'm very careful with my trade locations. So therefore, we're going to have a look at those and how I look for the levels, what do these lines mean, even though we did do a class last week on how I set up my charts and what each of these lines actually represents on the chart. Now, it's pretty early. I'm not exactly a morning person, so it will take me time to wake up a little bit. So do bear with me. I have copper and platinum here because those are a couple of products that do move for London a little bit better than some others. Even though on my private accounts, I do prefer to trade DAX at this time. And I will, do my little Eurex plug to get DAX into Topstep at some point. I'm just posting a link in the chat, so I know that most of you would have already voted for this. However, if there's anyone new here, make sure that you click that. And one of the reasons why, well, I can give you a little overview of what's happening in DAX right now. So we opened inside value, but DAX currently has quite a high volatility, just like the US equities. However, if we compare, let's see. Now, mind you, VIX is high everywhere, so this is all going to be a little bit more amplified. But even so, measuring the move that we currently have in DAX versus ES. So for ES, this is technically an out-of-hours market. So right now, London session is 93 ticks. For DAX is 206 ticks, okay? And, obviously as we hit the New York Open, ES goes a little bit more crazy, whereas DAX settles down a little bit. However, just note that if you're going to trade London, DAX is very, very liquid for this time of day. It is, like I said, my main product for London. And generally, if I'm going to trade anything else, it would be the copper or platinum. However, not exactly this early, because it's very rare that we get a move just straight off the bat that kind of continues for the entire day. Those sorts of moves typically tend to start around my 11 o'clock. So it's a little too early to find a proper swing. Typically, the open and the first hour of trading, which is known as the initial balance for some of us who are into profile trading and who use it as a lens into whatever's going on the day. It's the time when locals, aka market makers, are very active. Now, these days, market makers are HFTs. There is very little point getting involved in if you have my style of trading. If you're looking for more than about 30-40 ticks and you're looking for the swing. Like, for example, last week on one of the DAX trades, I took like a 300 tick move out of it. And, the VIX was high, but I think the entire day ended up being about 350. So that's the kind of movement that I'm looking for. This is why, some of my stats will float around sort of 40 to 43% when we're looking at some larger sample sizes. And let's have a look at this one. I mean, this one is kind of ballpark exactly where my stats usually are. Now, don't get me wrong. Sometimes, in last week, I did do a little bit more 1 hour towards the end of the day, especially once I had the big move. But effectively, 45% accuracy with a profit factor of 1.6. However, normally my profit factor will float from 1.7 up to 2.3, depends on, how scalpy I am. And the accuracy will either go up or down, depending on what I'm trying to do. Now, whenever I'm fishing for like big swing trades, sometimes I do take a couple of adjustments before I kind of get the price that I want. Now, what does that mean? It means the price is effectively reaching a level, but then maybe going a little bit deeper than I intended. So I will cut it early and then wait, reassess, and then kind of try to average my price, especially if I want to get it closer to the orientation point where I want it to be. And that will kind of drag the accuracy somewhat while still keeping the risk reward on that positive side. And you will see that most of my trades, they're not going to be super short, right? So I've had trades that last for 1 to 2 hours. 64% of them are 1 to 2 hours. And then less than 20% of my trades will be 2 to 5 minutes. And then 1 to 2 minutes is the ones that I basically cut early, right? So all of my stats are in line. It's just something to note, because I know some people are like, hey, you lost another trade. Yeah, I will lose 60% of them. And I'm totally cool with that. And if you're not, well, you don't have to watch, right? There's always that option. So GC or MGC is in an interesting spot. IM says, so let's have a look. I don't think it's at an interesting spot yet. I will want to see it around 29.05 all the way down to 2900. Then it will be an interesting spot. Right now, to me, this is like no man's land. So I don't think it's that interesting right now. We opened below value with a bit of a gap. How big is the gap? The gap is not too big. It's about 0.3%. So there is a chance that we go up and test the value lows on gold, which is 29.25. And then 29.30 is former weekly kickoff high, but also the core resistance and a gamma wall from the 0 DTEs. So yeah, that would be a good spot. But right here, right now, see, this is where when you're in between levels, this becomes more of a scalp for me. But every time I'm in between levels, I would like it to open inside value and imbalance so that we could actually, find a strategy around it. Otherwise, for me, this is still potential swing opportunity if we can get it, either higher or lower. So I have areas that are more important than where gold is right now. But yeah, 29.10, I've got nothing there. So we'll see whether we can actually move anywhere. All right, let's have a look at who we have around. I know Paul H. and Dan are here. I don't know when Dan sleeps. So again, yeah, perfect timing with 150k subs just in time when the whole crew is back. Yes, Dolby kept the fort going last week. King Joe says, Dee is a savage, don't watch. Yeah, I mean, I have very I have very thick skin at this point. So, I've had some very, very, mean messages coming through that would always end with some sort of really nasty thing at the end of it. So I was like, but I just don't care. Like, I always think those kind of people who do that are, they have like other issues. Like, just the fact that they've got up and chose violence, verbal violence, that usually spells that there's something else going on. And I kind of feel for them. I'm like, oh boy, you've got issues, man. Like, go see a psychiatrist or something. You need meds. You need meds. Yeah. And again, emotions in trading, when you're that impulsive, it's like, it's trading for you, man. It's like, again, I feel for you, probably not where you should be. And, I've even called out some people for that, and then promptly got responses. So yes, they have got off their meds. I initially, like a few years ago when that started happening, when I kind of got into a bit more, I suppose, public eye, whatever you want to call it, I would be, thinking, yeah, I'm going to make a joke, but it was actually like the people usually have problems and they're like, you're right, I did not take my meds today. And I was like, okay, you get on that now, man. Cool. Today's volatility on ES seems wild. What do you think, Dee? I mean, VIX is high. VIX is high. This is what we expect. This is where, those volatility indexes that are pushed in your face every so often, this is where they become very useful. VIX at over 20 is generally pretty high, and I think we're going up to like 25 or something. Actually, let's have a look at VIX, because I haven't looked at ES VIX. I look at DAX VIX, and that has gone a little bit nuts as well. S&P 500 volatility index. Oh god, it's over 25. Yeah, it's knocking on the door at 26. That is insane. So what tends to happen when you have really high VIX is that the ranges get really expanded, right? So you need to be a little bit careful of how you approach this market, because 10 tick stops, even in ES, are probably not going to cut it. And if you don't want to... So here's the thing. Let's talk about trade duration versus stop size. The smaller your stop size, the less likely it is that your trade will survive for any meaningful amount of time to actually have it do what it needs to do, right? So let's say that you want to short it, right? You're like, okay, we're liquidating. The world is melting down. Semi-apocalypse on our hands. So, and then you go, I'm going to plop in a short. And then it whips you out in 3 seconds. And you're like, what happened? High VIX happened. Hello. Yes, very dangerous. So you need to reassess your stops. Okay. Now, if you haven't been doing the whole London session for a while, this is more of a class of how, whilst I wait for my levels to get reached, I do talk a lot, Sorry if that bothers you. And it might surprise you that it is my job to, talk. But yeah, so I'm looking for bigger areas to get reached. And usually they're not reached at this time of day. So I could have used this opportunity to educate. And, my own stats say that every time I try to trade the first hour of London, because of the nature of the trades that I'm looking for, they're just not there. So I'm like, okay. And then I get my trades after. So usually I try to stick away from trading this early. But let's say that you're using, 20 tick stops on ES, right? So I typically use about 36 ticks to 40 ticks in normal times when the VIX is somewhere around 19, 18, 20. That's my normal VIX size. But we've had an expansion of the ranges now by, where's my ES chart? Now it's almost half. Now it's almost half, because just looking at the numbers, last week it was a third. So we had about a 250. Let me just double check that, but let me just go back in time here. Yeah, so 28th of February, average daily range for the New York session was 246 ticks, okay? Now, if I apply one of my formulas there, I get, like the way I like to use things, I get a stop loss of about 40 ticks. Now, last week, this number expanded to 380, which again, last week would have meant that my stops on ES would have had to have been about 60 to 65 ticks. That's about 15 points versus 10 points, right? So what do we have today? We have the New York session. London is a bit smaller, actually a lot smaller. London is like a third of the New York range in the overall ADR, so that's quite small. But yeah, the entire ADR is like 400 ticks. And New York is actually bigger. It's 452 ticks. So if I apply my formula there, I would need to use at least an 18-point stop, which is 75 ticks, in order to keep the methodology the same. So to get to effectively not get whipped out, to still have the opportunity to hold my trade for 1 to 3 hours, to still have enough room to make a decision of whether I want to keep it or not, it has to be scaled, right? So this is what it means to have volatility scaled stop losses, okay? So if you're not doing that and you're like, oh, I've been doing terribly, I don't know what's wrong. VIX is high, that's what's wrong, yeah? GG Trader, neither of those. So neither of those, I have my own measure that uses RTH, okay? And it's not ATR. It's, so I've taken something that was ATR and I've created it into my own concept out of a need. And this happened 14 years ago, okay? Actually longer than that, because the ADR modified the way that I wanted to be used, both for volatility and for levels. I started using that probably about 17 years ago, right? So a very long time. About a year into it, I was like, how can I get a better trade location? And then I was like, oh, okay. And then it wasn't until years later that I had a colleague in a prop firm, this was like 2013, who was doing something similar. And I was like, where did you hear that? So he was effectively somebody who came from one of the hedge funds, and he kind of gave me an idea, and I was like, I can maybe modify that. But then I figured that if we're doing intraday, I can do more with that, and then I came up with a way. Like, I'm basically just a giant nerd, and this is what keeps me up at night. But yeah, some of the things that I've tweaked on the existing sort of ideas out there, they became what is now known the Mark Stoker's method. This is the reason for my own YouTube channel being there, and I sort of fell into it because it wasn't some huge calculated thing where I'm going to create a course that I'm going to tell everyone, go tell others. It wasn't quite like that, right? It was a whole bunch of people asking me, hey, how did you get that level? Hey, because I became known in the industry, and I suppose I still am known, by being able to catch exhaustion points of the market. And they're like, how are you doing that? And then I found myself explaining the same thing over and over to different people. So this started to eat into my private life. People around me started getting annoyed. They're like, can you just not answer messages? Back then it was Skype, right? Can you not answer messages when we're trying to have a nice dinner with our friends? And things like that, it started to encroach on my private life. So to maximize my free time, I came up with this like little website, and then I thought to myself, well, why am I putting this on a website? There's YouTube, right? And in 2015, I uploaded one of my first YouTube videos a long time ago. Didn't take YouTube seriously up until probably about COVID, when I was in lockdown, a bit bored, not sure what was coming next. So I decided to, revive it. But that's how it started. So I started putting videos up on YouTube, and a whole bunch of interest was generated from that. And I started getting random people rather than just a few colleagues. I was a bit shocked at the number of people that watched my random little videos that were not produced. I didn't even have a light. I didn't have anything, right? It was just like crappy little Logitech camera, and me with big purple hair because I was still doing rock music. So basically people were like, where do I get this? How do I learn about this? Do you have a book? Do you have a course? Do you have this? And I was like, I have nothing. The YouTube videos is all there is. And they're like, but it's it's great, but I would like it to be more structured. And I'm like, okay, interesting. And then after I got wallpapered by emails like that, I decided, maybe for my own sake as well, because I have no human children. So maybe that will be my legacy, right? Maybe I can basically share my experience. And for the first sort of year, I didn't even charge for anything. I was just like, yeah, there you go, you can have it. But then I found a lot of people who were like stoners and just basically not at a good point in their life. They were coming to me with a bunch of questions, and I'm like, dude, you need to sort yourself out. What are you doing in life? I want to be a trader. And I'm like, yeah, that's probably not going to work for most people. I'm not saying that there aren't highly functioning people who do that, but for most people, any sort of drugs and stuff, it will prevent your brain from proper development. And, then you're going to be in this forever fight or flight response. And, same goes for alcohol, really. It's a drug that is kind of, oh yeah, everybody does it because it's legal. But it's the same thing. It will impair your thinking processes, especially if you're getting wasted every weekend, and expecting that you're going to become this amazing trader. Remember that back in the day, we had locals in the pits where you could see what other people are doing, right? We don't have that advantage these days. So we have to rely on ourselves, and it's just us. There's nobody else there, right? So it's all about your internal dialogue, and it's a very, very different game to what it was back in the day, and how things were. You don't see the Goldman guys right up there doing their things and, doing the signals and stuff. You have no idea what they're doing. So we have order flow, we have charts, and we have our own internal dialogue that obviously gets a little bit messed up. Well, a little bit for most people every single day. So we need to try and work on that part. But the validity of your levels and what you're using for levels, that needs to come first, right? Without strategy, there is no psychology. I see people constantly who are like, oh, I have a problem with psychology. It's like, what are you using? A moving average crossover. Cool story, bro. It's like... And, I see them longing into supplies, shorting into demands, and into quite obvious exhaustion points, and then wondering why they got smacked on the face. So, strategy first, stats, data gathering, and then once you've had a year or two of that, you notice that you're doing something despite your levels being there. You have full understanding of what is going on. So, for example, for copper... let me look at copper. So I know that it's opening below value with a slight gap. Well, it's not that slight. It's a reasonable gap. So it's over 1.5%, which means that the full mean reversion on copper is probably not on the cards today. So what else do I have? Where are we coming from the daily chart? Daily chart is coming from a touch of a supply as a third candle that is continuing down. Where are my relevant support areas for an exhaustion to the other side intraday, so mean reversion? We have a whole bunch of stuff from 65 all the way down to 461.50. So right here, right now, maybe if I get a pullback to VWAP was somewhere sensible, maybe even settlement from last week, which is up at 471.20. But the round number of 470 could be an interesting point as well, because we do have an HVL0DT that was reactive just pre-market. However, really, if it falls all the way down, this is the next area where I would expect some slowdown. So which one of these is going to work out, I don't know, but I do know that they are all very relevant. We have put support, we have London average session range low exhaustion, and average daily range low exhaustion as well. So all of this becomes an area of interest. But if you don't know that, you're like, oh, it's falling, let's short into GEX1, and then you get a pullback because GEX1 can be reactive. Maybe not enough to cause a full-on swing, even though it can sometimes. But let's just say that you got in, you wanted a scalp down, you wanted a momentum trade down because it looks so strong, and then it pulls back just enough to smack you in the face and goes your way. Is that the fault of the market, or is that your fault for not knowing that there's some relevant levels that we're coming into? And is that a psychological issue? Or is it the problem with floored levels? You know, chicken or an egg situation. So, you know, think about that before you start. This goes for newer traders. It doesn't go for somebody who's been around for like 3 to 5 years already. Because you know what your issues are and you know your levels at this point. You've been around long enough to sort of be a mishmash of the things that you found along the way, kept the things that sort of worked for you, and discarded stuff that you haven't. At least I hope you did. Life lessons with Dee. Yes, I am a little bit preachy, so I do apologize if people find it a little bit preachy. But you know, sometimes we need a bit of tough love, right? Testanik says, I built a strategy in a simulator in Python, and I'm currently testing multiple strategies with different parameters to see what is working. That's a great idea. Just watch out for over-optimization. If you're using particularly the last week or two, just note that this is high VIX environment, and this is not... So let's put it this way. High momentum environments, high volatility environments, they can seduce traders into thinking that their strategies are like smashing. But what is actually happening is that the volatility is so high that you know, even if you have like a partial idea of what is happening, the momentum will reward the poor choice of a trade location. Okay? Remember this. Remember this. Momentum rewards poor choice of a trade location. So even if you think, oh wow, this is a range bound day, but or no, so hold on, no, you're thinking this is a momentum trade, but it's actually a range bound day. That's what I wanted to say, really. What's going to happen is that the break that you partially have to the other side is still going to give you enough of tickage in it, enough of a move, in order to make it sort of 20, 30, 40 ticks worth, right? But then it turns around like ES did on Friday, and I did a VIP session with my people, and I said, you know, this looks very range bound. It's a big range, but it looks like it's going to end up as a range, right? And sure enough, it did. So we overshot some value areas by quite a bit more than what it normally does. But then it actually reached the ATRs on Friday. I can show you that. Turned around and went all the way back to where it came from. So, you know, if you don't know how to look for those exhaustion points, you'll be like, why did it turn around there? What happened? But if we go back and you know that the ADR exhaustion point was at 56.8375 roughly, you would have been looking for some sort of reaction. And if that failed, then I would have been looking for the reaction at 56.66, which at the time was an untouched average session range low for the New York session, right? So what happened? Well, we managed to change the microstructure to the upside. It was an inside day, and then it just rotated all the way back. Lo and behold, it rotated to the average session range high. Now, this was coming into the last 90 minutes of the session, and guess what? It had trouble going higher. I saw people going long at 57.80. It's like, what the hell are you doing? So you're getting involved after this entire move at an exhaustion point towards the end of the day, on an inside day, when we've already extended the initial balance both sides. Like, that is a bad trade. Like, on most days, that's going to smack you straight in the face, okay? So what I did, I was actually saying in my room that in the VIP coaching that I was going short DAX because DAX is a little less crazy, and I managed to get another couple grand out of it. So it's like, it's not its session, but because the high volatility, we also have DAX moving quite a bit. They've opened up the hours sometimes 2 years ago to be able to trade DAX that late. Before, after 4:30 my time, you wouldn't be able to trade it, but now you can trade it up until 9 a.m. So let me just go back to that. So I used ES to run my short hypothesis. And because the VIX is so high, I managed to get an additional, I think it was about 70 ticks out of it. So, using confluences and things like that is very useful, but longing into exhaustion points is not. And if you don't know how to look for them, I just look at people doing some, like I said, some super dodgy trades. I'm like, okay. And then if that works, like let's say it's a caveman long because something happened, the news comes out, and it just carries on. And then people think, okay, I'm going to be longing the highs at power hour all the time now because that worked. Your brain learns that a low quality setup has worked for you at some point. And here's an interesting thing about the whole dopamine and reward-based system in our brains is that you will not remember pretty well the times when the same setup keeps smacking you on the face after you've had the big win doing silly, dodgy setups, right? So this is the thing where you're effectively rewarding yourself for doing a bad trade. Now, whether you know it's a bad trade or not, it will depend on your system. But if you don't know the reasons why that particular time there was an outlier trade that worked out. So let's say in this environment, a lot of the dodgy trade ideas might work because of the high VIX. So if you don't know that and you're like, oh my God, my strategy is working really nicely now. So your strategy works in a high VIX environment. What did it do like 2, 3, 4, 5 weeks ago last year? How were you doing then? And if you weren't doing particularly well, it means that the strategy that you're using either has dodgy levels or it needs high VIX to do things properly, okay? Because you're relying on that momentum to keep you going. That's a slippery slope because we don't normally have high VIX to this degree, okay? So you need to see which one is it, not just go, oh wow, I've been doing really well last week. No, we need to be doing well throughout the year, not just like one isolated week where, everything's gone nuts because Trump said the T word, So be a little bit more like critical towards things. It's like, it's working. Why? Didn't work last year. Why? Be like more of a detective style person who's like trying to figure out why things are different now as opposed to last year. And it's not going to be you. It's going to be something that the market has done. If you have no change in the VIX and something changes with like to the positive side or the negative side. So let's say last year suddenly, nothing changed. VIX was still at like 20 or whatever. And then all of a sudden you worked something out about yourself and it started working. That's not the market, that is you. But as a trader, you need to figure out which one of those is true, right? So, I'm saying this because Ms. Kaya Art says, this was my first time gathering gains on ES, making an observation, but happy that my strategy has been consistent. So it's not the strategy. I would be worried that your approach is only working now because of the high VIX environment, okay? You need to be so careful of that. Because when that goes, and it does go, unfortunately, this is not normal market conditions, you're going to be wondering what's happening all of a sudden and why you're not making it work, because there's not enough detail in the strategy. So be super, super careful doing things. Wes says, during the London session, platinum and copper sit on hands till ETPO. Pretty much, yeah. On most days, I will not do a single trade until my 11 o'clock and your 12 o'clock, because I know Wes is located in CET, which is Central Europe time. Yeah. All right, let's carry on with the questions. Ben says, hey Dee, where do you get your GEX put and call levels from? This is becoming an FAQ, frequently asked questions. So it's from MentorQ. I'm going to put it in the thing. And so MentorQ. And the reason why I like MentorQ is they do alternative products that I trade. So I am somebody who was specialized in energies markets for a long time, like 13 years, 14 years actually. And then last year when crude oil started doing odd things, I went to gasoline and natural gas futures. Even though I have traded natural gas in the past, I probably traded more last year than ever. And then I also figured, because I'm running the London sessions and because I don't have the ability to have DAX, which is my main product for London, I went on a big exploration of what should I trade during London. And I settled on copper and platinum, but only when their own volatility index is high enough. So as a checklist in the morning, my first step is to see whether their respective C vols are at the levels that I require for my strategies to be fairly smooth. And then from there onwards, I do other things. But I was looking for a company that would offer me options activity from those products, right? And most of the other companies are just obsessed with SPX and QQQs. And I don't really trade those instruments very much. I might pop in an ES trade. I might do a reversal challenge every so often. But I'm not going to come to like the open and go, right, what is NQ doing? Because most of the time I don't care. And that is, something to know about me. I'm not an equities trader. And I think out there we have enough equities traders. You don't need another one. So I'm happy to be in my sort of alternative lane of bringing you the outlook and views for some other instruments like gasoline futures. Awesome product to trade. Very similar to crude oil, but more liquid. It's kind of like a crude oil twin, but with about 3 times more volatility in it, which is kind of how crude oil used to be, right? But unfortunately, something's happening in crude oil. They're trying to keep the prices relatively contained to like sub-certain prices. And that's more than obvious when you look at the crude oil chart. That every time you try and get up to a certain level, they're like, nah, we're going down. This is too high. And even though everything is screaming that crude oil should be higher in price, it isn't. So, makes you think whether there's any, maybe a plan behind why they're keeping it down to a certain price. So let's see what CL is doing today. Even though I won't outright trade it unless I absolutely have to. So it's come up a little bit from 66. 66 so far has been reactive. And if we look at the weekly chart, you can see 65 bounce from the previous week. Almost, so 65.30, close enough. But that was the bottom of the range. And that little demand area that I drew like a couple of weeks ago, that's still reactive. Look at that. I didn't draw that like after the fact. I drew it when I was explaining it to you at some point last week, right? So, or 2 weeks ago even. It could be 2 weeks ago. So I said, this is the demand area. That's where I would want to maybe get involved. but not outright futures because I don't think we have enough volatility for that. Maybe pop in an options trade there. That would be an idea. But yeah, 65 up to 78 is what we've been doing recently, right? That is the range. Is there a chance that we go higher from here? Yeah, I don't like the selling wick on the daily chart, but there is a little bit of a bullish engulfing and the bounce. I haven't dragged out the options levels from today, so this GEX3 is not from today. So I haven't done a deep dive into crude oil just yet for the day. So I think the Topstep levels are probably going to be updated when JD comes back and when he's awake, because the permanent employees went on a company retreat, so they should be back today. And that's when JD updates the Topstep levels manually, so please keep that in mind. But yeah, so far looking a little bullish, but for me, I want to see what happens with the selling wick that we had from like about 68. All right, do you trade BTC? I do not. I don't like crypto. I've kind of looked at it, but I feel that it's still one of those products where it just does what it's going to do for like a 30-minute period, and then it just does the whole swing all at once, and that's it. I don't like that. I like my products to give me a nudge. It's like we've turned around, and then for the next 2-3 hours to have follow through. Okay, when it just goes all in one go, my strategy, the way I like to do things, and the way I like to capture 150, 200, 300 ticks out of a move, that is not it. It's not going to be in a 30-minute period, and if it is, that's not conducive to my strategy, okay, and my mindset with where I am these days after nearly 20 years of trading at 44 years of age. Okay, so you have to work with your mindset and with your speed of thinking. And, some people are obsessed with NQ because they think, oh my God, everybody trades NQ, I have to do it too. You don't have to. There's other products out there. If it's causing anxiety, and if it's, I always say NQ giveth and NQ taketh because it's so crazy. And then you think, wow, yeah, this is great. I've just made a ton of money. And then it doesn't do what you're expecting it to do. Starts wagging around doing zoomies and doing all the things that NQ does, spazzing out on the chart. And then you lose everything and then you blow all of your accounts. That's the first sign that NQ is probably not for you, because it's poking in your fight or flight response and it's doing something to you that is not a good thing for your mental health. And therefore, there are other easier products. My first choice would be ES. If that's too slow, try YM. I know Jack doesn't like it, but YM is actually a really, really decent alternative to NQ. It still moves, but it's not as bonkers as NQ, okay? Testnik says, I'm testing it on several years of historical data, so that's better. Years is going too far out. So you need to test it for the last... Here's what I do. I like to test the last 3 months, the last 6 months, and the last year. Anything that happened 2, 3, 5 years ago, you can take it as like a general, like for example, I would look at an 8-year sample size of how often do we trend versus how often do we range, right? I'm not going to look at specific levels because the market that we have right now is markedly different from what we had 8 years ago, okay? But if we are looking at the previous, let's say 6 months, what has it done in those 6 months? And then compare it to something called the out of sample data. That will be you running your strategy, if it's fully automated, running the strategy for, let's say, 2 weeks to a month on an actual live market, and then seeing how it performs. So you effectively then blend the out of sample data with the backtesting data that you already had. Therefore, mixing and matching how it behaves for real, how much slippage is there because there is slippage, and on sim and on backtest you're not going to get slippage, at least nothing that you can use in reality. So those two approaches gives a more realistic idea of what sort of returns you can look at and how the strategy is performing. But just going for either like a very small sample size or for like years and years, it's a little bit overshoot, okay? So just be very careful of either doing too much testing, but I would still say that, you know, using several years would still be a form of over optimization, because, you know, you're trying to smooth out the strategy over a number of years, and for intraday that's just not going to work very well, unfortunately. It might work for like longer term strategies, like for swing trades. How can I smooth this out so that the trades in whichever VIX might survive a little bit better? And then you will still get to a point where you're like, I have to scale my stops somehow to the volatility of the product. Like, it has to be a part of an algorithm. You cannot, you know, you know, when we're talking just random clicking buttons and trading, that's one thing, but I'm a very systematic trader and I cannot do anything super discretionary. I can use discretion at the entry point, but I can't use discretion anywhere else. Somebody asked me about copper. Any plans for copper? Right now, no, because it's away from my levels, but platinum might be getting to a point where it's trying to fail the auction. So that might be interesting for me. And then if it fails the auction, goes higher, because I've got to say, I'm kind of bullish on metals despite the jump of a cliff that some of them have had recently. But I'm generally bullish on metals, and platinum is at a weekly point that is quite interesting to me. Let's just go like this. So if you look at the weekly chart and where we are at, there was a demand here. And now we sort of bounced. I don't like the selling wick on the weekly, but, you know, we still have a reversal of some sort. So I want to see if they can push it into a value acceptance and higher. If that obviously doesn't happen, my second hypo will be enforced, which is value low rejection. And that happened initially, but as yet, we're still inside the initial balance. So my second condition is to not get involved if there is no initial balance extension, because it still means that the locals are in force. They're doing their pinging up and down in a tight range or in a range, even if it isn't tight. But basically, there's no swing opportunities. I need the market to get out of the initial balance, and then I will have my setup. So yeah. Paul H says, do you change your approach to high VIX? I mean, switch gears. I was doing really well when the VIX was lower, but this change has caught me out. Just scale your stops, Paul. So whatever you've done now, we have had an expansion of VIX that has expanded the range from 280 to 450 ticks on ES especially. So that means, let me just do a bit of a calc. We've had a 40% effectively range expansion. So whatever stops you're using, you need to widen them by 40% and size down accordingly if you're able to, in order to absorb the volatility that we're having now. This is where the systematic parts of my methodology come in, right? All right, so DAX is actually at an interesting point now. It is coming into an ADR exhaustion low, 22,758. They didn't yet pop the initial balance, but they can sometimes stay inside the initial balance whilst that's happening. So there could be a reversal trade there for me. But again, a little bit early. It's only 9 o'clock, so yeah. Why did I start early today? I started early today because Topstep is a Chicago company, and we have agreed to, at least last year, we agreed to keep the London session going through the daylight savings changes, anchored to whatever Chicago is doing. Now, over here in Europe, we don't change our clocks until the end of March, 30th of March. So that means that the London session for this time is going to be happening an hour earlier, unless we come to some sort of an agreement to maybe move it again for to start, like when it used to start 90 minutes into the session, when I might have some more setups for you. All right, copper, I'm seeing an 85 order on the offer, which usually means they're going to hunt that. So that kind of puts us to the long side. If it means that they've missed some of my big levels, so be it. Sometimes when you cross over the HVL, that flips the gamma, and then we go from a low volatility environment to high volatility environment and vice versa. But yeah, that can be another point of reference. So I'm not interested in chasing it in the middle of the middle. Platinum has extended the initial balance. And now if we can stay above 973, so let me change this all to platinum, because that will be a trade that is setting up to be okay. Again, it's early, so this might actually smack me in the face, because sometimes they like to mess around all the way up to my 11 before they actually make the right call. So I am going to wait until the end of this particular candlestick on the 30-minute chart. Now, if you're trading something that has micros, platinum doesn't. Platinum is like $5 a tick, so it is cheaper. But it's still, if you start plowing it with 1, 2, 3, 4, that gets expensive. So I want to wait to see whether they actually accept value, because last time they rejected it. And if this is still like market makers and they want to fail the auction at value, that's where I need to check. But from GEX 1 all the way to GEX 3, I actually have some space. So, yeah, we'll see. So my plans for copper for now are to wait for my levels. That is the plan. I am bullish on metals. I am more inclined to look for longs on metals than I am for shorts. But again, that's just one hypothesis. I'm not coming into the market with any sort of a bias, and it's what I'm seeing, right? Would like to find a long opportunity, but I do have another short and 2 more sort of opportunities to get in both on shorts and longs in order to keep away the bias, right? So we don't want to trade with the bias. We want to trade what we see and then trade around the levels that we have hypos for. Whether that's short or long will depend on how big of a move I've had prior, right? If I'm aiming for longs, but I'm not able to get in on this and it rises all the way up to 474, 475, at that point that becomes a short intraday opportunity. I'm not just going to be going long into these levels, because it's kind of like the execution flow where you're writing code. You need this to happen in order for this to happen. But if this happens first, then the next code block, if this happens first, so the other code block gets executed, then you're not going to have this condition. So therefore the trade is not going to go through. Think about it that way. So if I say that if you think in conditional logic terms, what is that? If, then, if else conditionals, right? That's how my brain works. I can't trade like, oh, it's moving, I must get in. I don't trade like that, right? And I know many of you do, to be fair, right? Let's be honest. However, for me, if I think in that binary thinking process, yes, trade, no, don't trade, and I use the conditional logic, what would I need to keep going long? I need the HVL to be smashed along with GEX3 and then retested, but I don't want it reaching GEX2 and London ASR high in this gamma wall up at 75. If it does, that invalidates the longs, because we've already had the train arriving into the station on the other side. So if you're trying to go from London to Paris and the train already gets to Paris, but you're trying to get to Paris, do you enter a train in Paris and go, now we're going? You've arrived. We're here. There's nowhere else to go. So you then want to go back the other way, right? So if you're going back to London, then you sit on a Euro train and you go, okay, now we go back to London. So you're expecting that mean reversion to wherever the hell you came from to happen. Is that a better explanation of a mean reversion trade? So if a level is reached already and you haven't been in on it, it's reached its destination, it's time for the other side to step in, It's not like the trend is not your friend at this point. The trend is the enemy that you do not need to touch with a barge pole, because otherwise it's going to take the barge pole and whack you in the face. So yeah, and then you go, ow, what happened? Can someone tell me how to turn on the Topstep levels in the Topstep chart? I can tell you that. Very easy. So you go to indicators. You find Topstep daily levels. You click on that, and then it's going to, I've actually muted them here because I know JD hasn't done them. But if you then go, and there's also no copper, no Topstep levels on copper, because they don't look at that. Because NQ is life, right? But if we go Topstep daily levels on ES, just click on that. They turn up on your chart. There they are. If you want to put the labels of what they are, you need to click on the price chart. So the actual price chart, you go down to labels, and then you go indicator name labels. I don't know whether you can see that from me, if I'm blocking that. You can just about see it. So you're looking for indicator name labels, and then it's going to tell you what it is, what each level is. You can also switch them on and off. I usually like to have settlement, and I like to have Hoag's kickoff levels. I will be honest, I don't, because my indicator that from my company, we do a core calculation from actual Jim Dalton's books. So I trust those numbers a lot. And I also have the London numbers, which we don't have here because JD is mainly active through the New York session, and he will only give you the levels for the New York session, which is not very useful for those of us trading London, okay? All right, in 2 minutes, if platinum holds above the initial bounce high, I can try a trade. Now, the stop loss that I'm going to be using there is going to be 55 ticks because of the expanded volatility over there as well. Even though it's not that expanded, however, if it then draws into my trade to retest a level lower, I might get an opportunity to scale into a trade, which will then sort of average me in to my maximum default position of 3, which is what I'm using on this particular combine, and give me a chance to have my default stop loss slightly smaller. Okay, so I start small with a larger stop, disaster stop, then we aim to average in. I don't like averaging into winning trades unless I'm, trading with like 10 lots and then I'm adding 1 lot as an average. But this whole business of going into trades with like 1 lot, then averaging 2, then to 4, then a million, that introduces huge issues where your average price for the level that you were looking at, by increasing your position size 100%, you screw up your level. Like the level that you've now got as an average price is complete nonsense. That's what I don't like. So if I'm going to scale in, I might scale it like 1 time if it moves away within about 5-10% from the level, and if I've already scaled in nearly to my max default position size. But if you're trading just with 1, you won't have that opportunity, so be careful. 30 seconds till this candle close, so let's see if they give me an opportunity to do this. Okay, 18, 17. Now remember, there's a lag on these live streams on YouTube, so don't go copying trades or anything. If this is not in your plan, please do not copy anything that I'm doing. All right, so we're going. This is 1 scale in. one trade. So this is the first trade. Let's see if it allows me to scale in. If it doesn't allow me to scale in, that's fine. But for now, GAX3 should be at least in my sights. And again, full disclosure, this is very early for my trade. So it's Monday, and I generally don't like trading this early on Mondays. Because the last thing you want is to dig a massive hole for yourself on a Monday, and then the entire week becomes about bulldozing yourself out of a hole you created on Monday. It's not a good mental thing. All right, let's have a look. The plan is there is no plan. Well, yeah, there should be. So yeah. Flexible bias, yes. Plan, absolutely. MB says 150k subscribers. Yes, we've said this at the beginning of the stream. What is the crime says, Trump wants to get rid of the clock change. Everybody wants to get rid of the clock change. Clock change is the bane of my existence, okay? The bane of my existence. I absolutely hate the thing. Every time we're in this like weird daylight savings, all of the indicators have to be manually adjusted for the US session, because obviously London is still running on like the old clock, right? It's like still normal. But the US will start an hour earlier and end an hour earlier. So the whole thing, in fact, when I was still on fast markets, when we first started TopstepTV, I actually completely forgot about that. And I was not well, so I was spending a lot of my time in bed back then. And then I get an email from one of the producers that says, "Hey Dee, so yeah, I don't know whether you will be joining us today for fast markets, but you know if you do decide, just pop in." And I was like, "Oh no, daylight savings!" It's like, what an idiot! I totally forgot. Just tells you where I was in my whole brain. A newbie question here from Ben says, is most of the volume for metals coming from the London Metals Exchange? It used to, but no. Actually, the LME is no longer, I don't know whether you know that, but LME has been shut for business. There is no more open outcry pit for the London Metal Exchange. Go figure. But the main volume for silver and gold will be happening for COMEX. So COMEX, if you look at the ranges, is still the largest session. That is not the case always with platinum and copper, which is why I chose them for this particular session. Copper right now does have COMEX as its largest session. It's 163 ticks from literally COMEX open all the way to the end of the electronic exchange trading, whereas London has 140, which is a little low for copper. So right now I do aim to get my main trading on copper done for COMEX. That will definitely dictate which session I'm going to be using. Whichever one is larger, that's where I go, okay? Now platinum, but that's not always true. Like if you have something that's gone absolutely bonkers like an NQ and it's suddenly going 3,000 ticks a day, I would actually go to the quieter session because it still offers a crazy amount of tickage to be had, but it's not, it's not quiet. It still has smoother movement. So it really depends what you're trading and when. But for platinum, for example, both London and New York are equal, so they're around 146, let's say 150 ticks for the entire specific session. So 146 for London, 145 for COMEX, and all of that brings it to about 192 for the overall 24-hour session, which means that Tokyo also moves it. But yeah, it's a very good way to figure out where the party's at. Now with gold, Asia likes to move it as well. Sometimes London, but I find that gold for London is more scalpy. And again, I'm not a scalper in that regard. I'm a scalper when I need to be, okay? So when I have a range-bound day and that there's no swings to be had, that is where I will turn into a more scalpy person, and you will see me do more trading then. The number of trades that I have on this particular report is mainly because of the scaling ins and scaling outs. So this is not me doing like 24 trades on three contracts. It's me starting with one, then going 2, 3, adding, and then also scaling out once we're past 2 R multiples, because I don't scale out before we're there, and I don't move my stops. Here we go. So now I'm going to polarize some people. I don't move stops. I partial. And I partial only once I get to a statistically viable point, which is 2 R multiples. If I don't have a trade that is 2 R multiples, if I'm doing a range bound trade and I'm going, okay, let's just do, a scalp from the low to the middle, I will take it all. So I will go in, maybe scale in like once or twice, and then averaging the price into a zone. So let's say if you have a zone that you're working from, let's say up here, I will be plopping in one there and another one here, and then aiming for a reversal. Not today. This is a value acceptance trade on platinum. That is not what's happening here. This is actually a momentum trade. But generally when you have, a range bound day, you can sort of use a second standard deviation zone and the session highs, and then sort of work within a zone of 30-50 ticks to average in your price. And then you're aiming for about 1 R. Like, look, sometimes if it's trade with the trend, you can have the price rotating all the way to the other side, which is what equities do, right? But in metals, it's a little bit more sketchy than that. However, range-bound trade long in ES is something that I will keep for more time, longer, purely because of the way equities work. They have a strong upward bias and strong upward pull, and they offer us range-bound trades that will rotate all the way up. But if you're doing the shorts on equities, that is a range-bound trade, I'm very careful, and I'm always taking less out of those. I'm like, okay, I've got 30 ticks, let me just bail now. Even though it's like, it might offer me 90 ticks, but I will still, on the short side, I will still be a little bit more careful. So again, you have to work with the behavior of the product and with the trend of the product. An opposite situation would be in crude, where if I'm long in crude, I will be very careful with it. But if I'm short in crude, I might hold it until the cows come home, because it's a market that is mainly short, right? Somebody tries to take it higher, they short it. Keeps going down. If I go over all my stats that I've done on crude oil, I would say that probably about 60-70% of them are shorts, bizarrely. And yet one of my biggest days in crude oil, where I made $86,000, that was a long, because they shut down refineries. It was a long time ago. It was like 2014, 2015. And that was an outlier, that was an outlier. So it's like, I'm not going to expect that to happen every single day. I remember it as like, wow, that was impressive, but I'm not going to expect that I'm going to capture what was like a 600 tick day every single time. The last time we had those sort of ranges in crude oil specifically, it was during COVID, and then futures went negative, and then they suspended crude oil trading for a while, for weeks on end actually. And that's how I went to other instruments, right? I started looking at, ES and NQ, because suddenly we had more, we had more things happening with the volatility. And, before then, ES to me was just like so dull. And I've been watching it since 2013, thinking, how can people trade this thing? Because when I started it, it was only moving like barely 20 ticks a day for the entire 24-hour session. It was like, and I just sat there thinking, this looks like Eurostocks. This is horrible. I think Eurostocks is better now as well. It's much more liquid than it used to be. Eurostocks used to be like this. You put on a trade, you go for lunch for 2 hours, or gym, or whatever I was doing, in my break. You come back, and it's moved 3 ticks. It was like bonds. It was crazy. Now I think Eurostocks are pretty fun. But yeah, bond, Eurostocks, and DAX were 3 of the most traded products in the London prop firm that I was at. So yeah, we need to get those products into Topstep. We definitely do. Okay, what is the time? The time is 20 to 10. let's get more questions, because I'm not doing anything today up until 11. And I'm also taking my crowd for a long walk in the countryside. It does look like I should probably make this more public now. I will be moving towards the end of March, beginning of April, because we sold our primary residence. And there could be a disruption to the London session. However, I do think that they have Aaron, who is going to be running the London session open, and then we're going to be calling this something else and basically increasing the programming for our European side. But don't quote me on that, because it's all just still up in arms. However, I might be able to get somebody to stand in for me while I work out the internet in the new place, and because it's quite remote, and I might need to get like something like Starlink and stuff. But yeah, there could be a disruption towards the end of March with the London sessions. I sound like the London Underground. Disruptions expected towards the end of March due to roadworks. Due to new lines being installed. Mind the gap. Let's have a look. Sheikh Hughes says, morning. Good morning. Very good to see you here. Quack says, hey guys, I have a question. Past my combine now. I wanted to activate the account. It seems like the payment is still not getting through. Did someone else experience this? Well, I'm not IT support, okay? I'm not IT support, but are you having a problem with the payment system or with the activation? So if you, and do you already have a live account? This is the main question. If you have a live account already, you won't be able to activate another combine. If you already have 5 active combines, you also won't be able to activate more unless you blow up one of them. Okay, so you can only have 5 max XFAs at any one time. Any more than that, they will be waiting in the wings until you blow one of them, and then you can reactivate, okay? Yeah, Shay, so if you follow me on Twitter, which is PipRaider, Pip_Raider, I did do a little announcement that we're going to be starting earlier because of the change, daylight savings change in USA that starts 3 weeks earlier in March before UK and EU actually do it. All right, so Bruno has some points here to see what you can do. This is for Quex. Ensure your name and billing address on your Topstep profile matches exactly what is on file with your card issuer. And the card has to be in your name. This includes any billing zip code. I mean, I would have thought that that's like something that everybody already knows, but hey ho. Then manually enter your payment using information instead of using autofill. So that could help as well. Or call your card issuer or a bank to ask if they're blocking the transactions from Topstep. Actually, guys, this is something that happens to our company as well, to market stalkers. Whenever you're like signing up for courses and stuff, they basically immediately like block you on the first try, because it's like, oh, this is a weird company. What is this? Because you're not on the list or whatever. You know, it's not a blue chip company. It's not a gas or electricity company. It's not Amazon. So, it might get blocked. So you may need to call your bank. So this is what that's all about. You can check with their fraud department if they're blocking the transaction from Topstep. This may occur if you're trying to do a repeat purchases in a short period of time with Topstep. What is that? You're basically doing resets all the time, and they're going, is this a scam? But no, it's you losing control over your own trading and clicking buttons, right? Lastly, contact your card provider to enable 3DS verification. It might be possible to do this in any app you use with your payment method. It could also be called different things like Visa Secure, American Express SafeKey, MasterCard Identity Check. If none of this works, then please contact Topstep support. IT support D. Hoping that helps. So, don't. I was just reading out what Bruno said to me. Okay, I'm not IT support. I have no idea how Topstep support works. I'm just an on-air personality, so But yeah, hopefully those steps will help you resolve your payment issues. If not, you will need to call Topstep support, okay? C4 says, any good trading books you would recommend? I mean, there are a whole bunch of them, right? So there are, there's Trading in the Zone by Mark Douglas. There is Tom Hugar's Best Loser Wins. Now, Anne-Marie actually said there's a book that I'm still trying to get. Like, I wasn't able to get it on Kindle or anything, but I'm getting an actual paperback delivered, so that hasn't been delivered yet. But John Coates, The Hour Between Dog and Wolf, and it looks like it's pretty awesome for like the psychological side. Psychological side. Sorry, it's a bit early. So some of the words are a little bit difficult to say. Yeah, so that's the book that I'm going to be reading. I personally like Mike Bellafiore's One Good Trade. I found that pretty interesting. Not from any kind of strategy point, but it was just very interesting to know how prop traders are, like what sort of people go into it, what they struggle with, and how day-to-day life in a prop firm looks like. And I was obsessed with it when I first started working in prop, because I found huge parallels with my office, where we had a whole bunch of characters in the office and, very, very unusual backgrounds. So yeah, it was just like a very, very good read. Now, I do have a suggestion that I did suggest to my VIPs as well. So Dan, you will know this. The Miracle Equation by Hal Elrod. It is not a trading book. It's a book about doing more in life. Now, not the morning equation, not the morning miracle or whatever the first one was, the second book. I disagreed with some points that he put in the first book, because I don't think that, like, I know the morning routine is something that some people strive for, and they're like, oh, that's what people do this. But I feel that if I do a whole bunch of stuff ahead of time, then mind you, I have a chronic illness, so that puts a little bit of wrench in the works. It just sort of sups my energy for trading, for what I actually should be doing. So instead of tiring out myself more, I will actually do something like maybe a yoga nidra, just a short thing, and making sure I take care of my skin in the morning. Something that is kind of ritualistic but doesn't take a lot of energy. I was never the one to get up and immediately go to the gym, even though I have done it. So I was, especially in Chicago, you have to get up pretty early. So I was getting up at like 5:30 in the morning in order to fit in a gym session beforehand. But then even that after a while was really hard. Like when it got cold, like, oh my God, I don't know how people live there. It was like you get out and your face is melting from the cold. It's like horrible. So I started doing gym in my lunchtime. I just couldn't really sustain the whole 5:30 a.m. But yeah, for me, tiring yourself out, it kind of has a place when you're struggling with the fight or flight response. But again, for me, it would mean that I would be knackered already. So then my mental capital would already be exhausted trying to do the physical stuff. And I found that if I overtrained in the morning, I would just be completely useless. So there's a limit to what you should be doing. So yeah. But yeah, do read the book by Hal Elrod called The Miracle Equation, where he's not that much into the whole morning routine. This has to be done. He's actually talking about how to go through an identity shift that will then make you follow your goals to like the maximum effort and unwavering faith is what he likes to call that. And it's basically not relying on any sort of a crutch, giving yourself a goal, and even if you don't reach that goal, you still go through an identity shift at that point that will enable you to eventually reach the goal. So the goal is not to reach the goal. The goal is to develop the skills that will enable you to get there. So for those of you who are passing the combines in 2 days and thinking that's a good thing, you're doing the wrong thing. I'm sorry to burst your bubble, but you're not setting yourself up for that identity shift and realizing how it looks to sustainably trade an account for any length of periods. You're using unsustainable methods and relying on resets to get you there. And then once you're in an XFA, you're like, I'm going to do the same thing. Oh no, I lost an XFA. What am I doing wrong? Well, first and foremost, you're passing the combines in 2 days. So stop. Second of all, you need to learn how to trade sustainably, right? Can you sustain a combine for a month, 2 months? Because that's what you need to do in an XFA. There's no goal in the XFA. Yeah. Yeah, and Bruno says, become the person that can achieve your goal is the goal. That is the quote from the book, because I know you read it. So it's such an awesome quote, right? It's an awesome quote. And it sort of gives you some ways to deal with frustration. And I will say when he does do that in the book, please, before you go and do what Hal Elrod advises to do if you're super frustrated, hit the shot clock, right? So hit the manual lockout for 5 minutes and then do whatever you need to do and then come back, okay? So that's one caveat where you have to adapt it a little bit for trading. But it's the same approach. It's probably one of the best books I've ever read that has nothing to do with trading. But it sort of relates to goals and reaching goals and how to actually make yourself into a person that can do amazing things. All right. Some traders say simplicity is key. Do you agree? It depends. Simplicity in trading can be helpful if you're suffering from paralysis analysis. You will notice that I have a few things on my chart. So it's not exactly simple. But at the same time, I'm coming up to almost 20 years of doing this, right? Each of these lines has a use. I've done that last week. You can go back and find, when did I do that? I think it was a Thursday, Wednesday, Thursday, or Friday. I don't know. It wasn't a Friday because I know I didn't do it at the end of the week. So it's going to be either a Wednesday or a Thursday. So go back. I started with an empty chart and explained it. Now you have people like Dakota who goes, keep it simple. And then he does things that are not simple. So it's like scaling in at just the right point, scaling out at just the right point, getting involved at the levels that are support and resistance levels that are really good trade locations on a 1 hour. Using his, maybe discretionary, but does use the maximum adverse excursion to scale in because he knows intuitively how deep something is going to draw against him, and then he's okay to scale in. But again, you're looking at the culmination of somebody who's been doing it for 16 years. And I've said this before. I think that he's suffering a little bit from expert blindness, where he's doing things that are really advanced and calling them simple. Okay, so be very careful with people who have been in this industry for a long time and claiming that what they're doing is super simple. Just keep it simple. You'll be all right. It's not simple. There are things that you have to know, like VIX, like, is this a good trade location? Did we come up too high for this to be a good trade location because now we are at a risk of an exhaustion and therefore trend is no longer your friend? Are we, reaching the time of day when the volatility drops off? That's not simple either. You need to think about that. Is that simple? Well, put an alarm to remind you, but most new traders are going to be so locked in, so zoned into what they're doing, that they will completely forget to check that it is lunchtime and that things are slowing down a little bit. So, is that simple? Remembering things? No, it's not. So it's like, Pragmatic One says, homework/GEX levels. Have you found a way to even partially automate this on Topstep X? No, because they don't allow third-party indicators yet. I don't know whether they will at some point, but for now, this is still a new platform. I know that MentorQ have automated certain platforms, like I think Quantar and Bookmap have the automatic API. But you can't really automate it because it's a contextual thing. So it's not like, HVL, every time we go above it, we have to go into a mad trending day. Because if you're already at a mad trending day, crossing over an HVL would mean that now we're going to go into a quieter day. Yeah, I mean, I suppose you can account for that by looking at whether we're a negative or positive gamma. But It's also not always true that, the gamma wall that has a lot of call strikes around it is always going to be a resistance. Sometimes call buying happens at that point, and then you go higher. So it's a very discretionary thing. And also you can have gamma flows that change throughout the day. So then what do? It's not the thing to be automating. The thing to automate would be something like the exhaustion. And we have done that. So we have algorithms that basically look at the exhaustion point and then fish for reversals at very specific times of day. But as you know, quant algorithms are always coded around one idea rather than a million of them. If you try and put too many filters in there around different ideas, it will never trade because it will be clashing between different ideas. It's like, oh, we have value low here, but we are accepting value, but also we are coming into the exhaustion point. So is this a trade or is it not a trade? And then it just filters out too many things and doesn't trade. So, you can create different algorithms around the idea that there's a value acceptance and it only looks at that. You can create an idea that we've reached into an ATR high and that we're going to be shorting from there. That's the second idea, second algorithm, separate. But smushing them all together in the same thing it's not really advisable. So effectively what a lot of people do in their companies is to have a quant strategist who will decide which of the algorithms should be switched on for that particular period or time of day or even time of the year and seasonality and all of that. So it's not as simple. If you see somebody selling one signal service and they're like, well, this is me trading, I would be very skeptical about that because those sorts of algorithms are like 30, 40 grand to license per month. Okay. They're not cheap if they really work. Okay. They're not going to be $99 a month. So I'm just putting that out there. Dakota is a case study. Well, Dakota is an experienced trader. I don't think there's anything to study there. It's just experience and good trading decisions. It's not that he doesn't have bad periods. He's just able to turn them around really quickly. He's an emotionally resilient man as well. And I know he looks younger, but he is 31. He's not a child, And he started, we've had him on for the London session, obviously. And he said that he started messing around with the markets when he was 9. That immediately tells you that's not your, standards run-of-the-mill person who's like at 9 years old can barely read. He's like, no, I want to do the markets. This is my dream. This is my destiny. So, Dakota started very early and then he started trading already at whatever he was, 13, 14. That's a long time. It's a long time to be staring at the markets. So it's just pure experience there. He looks younger. He looks like Matt Damon, but young Matt Damon. But he is just an experienced trader, all-around good guy as well. So, But yeah, for everything that he says that is simple, I always go, and I said that to him when he was on here, right? I said, you say simple and then you do things that are not that simple. And he's like, yeah. So it's I suppose anyone after 10 years, 15 years, 20 years of doing this, it might seem like we're not doing that much. It's like, oh, we have a few lines on the chart. And it's like, I always get asked, how the hell do you catch your reversals? You've seen me do RBOB trades towards the end of the day on the main broadcast. And they go for anywhere from 60, 70 ticks all the way up to 160 ticks in the space of the 30 minutes up to settlement, right? So once settlement happens in NYMEX, that setup is over. So wherever it got to up until then. But yeah, so people are like, how did you know that that's going to turn around? It's just stats and data, right? And me seeing that same thing, confidence of seeing the same thing and living through the same thing over and over. For me, some of the London trades on copper, platinum, and, anything that isn't DAX. DAX I've been looking at for 7 years and trading it for 7 years, maybe longer actually. Yeah, it's more like 8 or 9 years now. So I started looking at it when I was still in prop. But I didn't trade it for 3-4 years. And then I'm like, I'm going to try this. I think I like it. And then I just stuck with it for London. If I am going to trade London, DAX is the thing. So that's where I have most experience. All of this other stuff like copper, platinum, I went on a big exploration of what moves in London that we have with Topstep. So, I don't have that much experience. I have 1 year and some backtesting that I can fall back on. But, I can't tell you with like the experience of thousands and thousands of trades in platinum that value acceptance for this time of day works. I can tell you that platinum is fairly directional and that a lot of the times reversals during London would not work. So once it kind of decides to go one way and hangs above the initial balance, that tends to bring, at least what I've observed last year, it tends to bring the move in the single direction for at least until about 1:32 p.m. my time, but that's going to be earlier today because we have the daylight saving thing. So I don't have that much, like I certainly don't have 18 years of watching platinum. What does it do during London? Because I never, never needed it. But out of a need for these streams without having DAX, I'm like, well, what else do I do? DAX is now consolidating. It bounced from VWAP, speaking of DAX. Now, this is a huge, like these candles are massive, so I need to find something, a way to get it into a slightly better situation. All right, so maybe a midpoint from 22,850, and then maybe using this low, which wouldn't be ideal because I'm breaking the structure here. So I can maybe start with, let's see, if I go 830, let me just see where the options levels are. That's GEX4. Okay, so GEX4 at 22,840 would need to hold. Right. So yeah, this low could probably be okay. It's probably going to be okay. So let's say if I want to use a stop of about 55, 60 ticks, let's say, I would probably make it look like this, but I need a pullback. So I do need a pullback. So basically we'll be looking for roughly 850 as a starting point. I'm just planning this out. I'm not in on anything. So roughly 850. And then if that just continues, you're going to have another swing to fall back on. And then maybe you can use this low and then kind of to project a mid-band trade from there, which would then put you somewhere around here. But yeah, you're basically looking for a retracement. And then we might have some longs here. I do want to see ultimately strength at VWAP, so going over that. But we are coming from an exhaustion point that almost got there, but it is an expanded VIX, so 22,758. We don't have many news today, so this is why sometimes on Mondays we could kind of miss these big levels. But the ADR low in DAX is 22,760. The London ASR low, where is that? Is already exhausted. So the ASR low already got smacked when we got to 22,821. So maybe a test of anywhere from 850 to 830. If we get that, that would be my desired entry. And then I'm going to use a wider stop of 55 to 60 ticks. Maybe if it drags against me, I can minimize that. But I'm going to start with one mini DAX today, because I already have a sizable profits for the month, so I want to try to save that as we get into the middle of the month. So a little bit of capital preservation there for Monday. If it doesn't draw back, doesn't matter, it's fine. All right, so I'm going to finish this stream. I'm going to take this 45 ticks because for now I don't like this selling wick on a 30-minute chart in platinum. It might continue, it might not, but regardless, it will give me another option slightly later on. And And yeah, we'll see what the day brings. But, you know, it's Monday. I was expecting this to kind of be a little bit more decisive. They decided the GEX 3 is potentially a problem. So this is how I use the GEX levels. It's not like, oh, I'm going to go short here. That's clashing against my value acceptance. So really, if I'm going to go short, this does need to go higher. But at this present time, GEX 3 is causing some jip. And it's causing us to sell off from there, which is why I'm closing it at a scratch, basically. So that's it. All right. Thank you so much for being here with me. I'm going to throw some links for you. Again, I'm going to avoid the 5,000 payout club because they do not send things out over to this side of the pond. However, if you are on Discord, we have grown to over 100,000 subscribers. We have the VIP group in there, which is for now a completely random draft, and there is no proving anything right now. It's just like you sign up for it. If your name is dragged out in the draft, you go in and you get assigned to a random group. So at the moment, you cannot choose whose group you're going to be in on. In the future, once we get closer to Topstep Trading League formation, we might have something like coaches being able to choose who's going to be in their groups, and also maybe traders being, you know, given the choice who's going to be in their groups as well. But that is the Discord. Check us out in there. Come and hang. If you didn't know, I do have my own Market Stalkers channel. So if you type in Market Stalkers in YouTube, it's gonna pop up. I think they also have the links down below. Yeah, so they have the links down below this video. So please check out both my Twix, my Twitter or X, and my my YouTube channel. Finally, if you are up for coming and joining us on air, we're looking for traders to come on Topstep TV, the main broadcast, and maybe even, you know, London. If you know, I'm going to try and get Jerome to be a part of the London session as well. We can steal him for a day or two. Whether you're on the big board or you're still jabbing away in your trading combine, if you want to mix it up with the crew, then we want you. Put your name in the ring by filling out this form, and somebody will get back to you. That's it for today. Thank you so much for being with me. I'm Deeyana Angelo, aka Market Stalker Dee. This has been the London session on Topstep TV. I will see you tomorrow. Take care.